Hello friends, welcome to this video. This video is about NISM series 19C, which is related to Alternative Investment Fund Manager Certification Program. In this video, like most of my videos, I will take you through some multiple choice questions. These questions are related to Chapter 11, and Chapter 11 basically deals with investment strategies, investment process, and governance of alternative investment funds. So I will show you 10 quiz questions going forward. I will also share answers with you so that you can work with me. So let us start with the question number 1. Which of the following funding is required to invest in product improvement, large scale marketing campaigns, new acquisitions, and launching new products? So when a business starts its journey, the journey has many aspects to it. Obviously, the journey starts at a very small scale, and then it grows and becomes big. So this is the stage in which the business is focusing on product development, large scale marketing campaigns, new acquisitions, and launching new products. So here the funding which is required is classified as Series C funding. So Series C funding basically helps uh, companies to meet all these requirements. So basically, as a startup, you may get different fundings: Series 1, Series A, Series B, pre-seed capital. But it is the Series C funding which will help you achieve all this. Question number 2 is, which of the following are investors uh, in the category of later stage capital? So which of the following are investors in the category of later stage capital, which is basically to ask that there is a capital that can come pre-seed, then at the seed level, and like that at different levels. So later stage capital comes from private equity funds. Now private equity fund is kind of second last stage, because after this what comes is the IPO, or the public capital, which can be raised by the companies. So family and friends typically will be the first one, angel investor will be the second one, and venture capital will be the third one. So two questions are done. We move on to third one. Dash 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 capital supports product development, digital marketing, commercial manufacturing, and initial customer outreach. Right? So again, the same aspect. What kind of capital will be required here? So we call this kind of a capital which helps you to do the digital marketing, initial customer reach, and commercial manufacturing, is what we call as the early stage capital. So that's the capital that will be needed. All these questions are from chapter 11, so you can, if you read chapter 11, you will be able to relate to it. Quiz 4 is, some companies may require dash 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 of financing to fund their working capital requirements between two rounds of funding. Now working capital requirements are very crucial for any company, but when you require it between two rounds of funding, because there are two rounds and you are trying to kind of connect both the rounds, we call it as bridge round. So bridge round is what will be the answer for this. This takes me to question number 5, or quiz 5. Which of the following funding is required when company wants to get listed on stock exchange and requires funds to complete listing formalities such as appointing merchant bankers, legal counsels, auditors, registrar, and transfer agents? So this is what we will define not as pre-seed or post-seed or early stage. This is what is called as the mezzanine capital. So mezzanine capital will be required at this particular stage. Question number 6 is again a fill in the blank. We'll look into the customer acquisition cost and the customer lifeline of the startup lifetime value, which is basically CLV. So CAC and CLV, who is keenly interested in this? So basically it is the angel investors who want to know this, because this is the starting point of the business and they are putting their money, so they would be keen to know this. This takes us to question number 7. At what stage can a company raise funds from venture capital investors by issuing equity shares in pre-series A, series A or series B round? So you had seen one answer which we had with respect to series C. This is about pre-series A, series A or series B. So if a company has to raise funds, this raising of the fund will be done at the early stage. So we will put the answer as early stage. The next question is question number 8. The company A is ABC is a listed company where the management has 25% holding while the remaining portion is held by public shareholders. The current management purchases enough shares from public so that it can end up holding at least 51% of the stock. So basically management is increasing the stock. Okay, so here in this particular case we will call this scenario or this example as the management buyout. So management is getting or taking control of the business. The next question is, an idea has the potential to become an opportunity and a viable enterprise if it has the potential to break even generally within how many months of ideation, has a passionate and dedicated team developing the idea, faces manageable risk and can forecast high gross margins. So the time limit for this is 36 months. So the answer will be 36 months. So for an idea that has a potential to become opportunity and viable enterprise, the break-even period, the time frame taken is 36 months. The last question of this video is, which of the following step falls between deal sourcing and initial due diligence in a private equity deal structure? This is basically nothing but signing of a NDA or non-disclosure agreement. So in this video I took you through 10 questions which were from chapter 11. I hope you found some meaning in these questions and it will help you to refresh your understanding. Please do subscribe to my channel and do like this video. Do not also forget to share it with your friends so that the message spreads and more and more people can benefit from this. Thank you.